welcome everyone who's been kind enough to join us earlier. PHS and Simon W, good to see you. And thanks very much, Keith, for hosting another one of our discussions on your Discord channel, the Portfolio Matters Discord channel.
Marvellous. Well, thanks for doing all the work, Rogue, as usual. I like this sort of division of labour.
Well, yeah, as I know you've been working so hard recently yourself, it's
Yeah. Actually, I have. I've been working on this startup. I've actually been doing some work once. Anyway.
That was I meant. So you can rest your feet up now and enjoy as I present what I've been finding out about money, because I've wanted to invest in some bank stocks, and I realized that before I could understand the bank stocks, I'd have to actually understand what money is and how the banking system works. So it's been absolutely eye-watering, the things I've been discovering the last few weeks, which I never realized about how the world works, how money works. So I'll be sharing that with everyone today. So first of all, can everyone see my screen okay? We've got a message. Let me go to chat.
Actually, honestly, I think MNT, has a lot to argue for it as a description of the real world, but we'll get onto that presumably. Anyway, Rogue, I can't see your presentation.
So can you see? Yeah, but can you see my screen?
I can.
And
I see myself disappearing into the distance.
Perfect. Right. So okay. So now everyone can see the blue table there with the agenda.
Okay.
Can you see that yet?
Yeah.
Great. So I suggest we try and have a 5-minute time challenge. We can just update each other's portfolios, and then.
Well. Okay, Rogue. Well, let me kick off. It won't take 5 minutes because everyone who watches like Portfolio Matters knows exactly what I'm doing, and it's a total effing disaster. And I've totally messed it up in that I was expecting higher, much higher US interest rates. So US interest rates, real US interest rates, as measured by the San Francisco Fed proxy rate, have gone from minus 0.25% to 7%. Down a bit now, and I expected that to kill the economy, and it didn't. And so I bought bonds expecting economy to slow, inflation to come down, and it ain't worked. So I've lost money, and it's been a total disaster. Equities are off to the races, and I'm missing out as I am stuck in a bond trade that doesn't work. Because it doesn't really matter that equities are going up. What matters to me is trying to get my bloody money back. Now, in the bonds, the have a lot to argue for them in the fact that they are, if your capital gains on gilts are tax free. Today's been a good day, but it's not been great, and let's see what happens. The US economy, there are signs it's slowing, but it's still incredibly strong. Equities are doing incredibly well. Everything is off to the races apart from bonds, and I'm having a terrible year. So, but I still think that the interest rates, the yields on bonds are far too high, given the outlook for UK growth and so yields are a function of productivity ultimately, and UK productivity is bloody awful. So bond yields should be low. So I don't think high yields are sustainable, and that's it. Anyway, all know what's going on with my portfolio, so I will stop there.
Okay, I mean, we can discuss the interest rates and bond yields and inflation in a bit later.
Yeah.
All I'll comment is we've got different trading styles because I always try to have 6 or 7 kind of investment themes so I'm not
Very good
overexposed.
plan.
And also I always set stop losses. So if something's going the wrong way, I'll
Yeah.
just give up on it and walk away with a loss of normally about a 20% stop loss. So that's my only comments. We've got someone's TV, probably market timer, is it?
I've just turned it off. Sorry.
So
Great.
nice to hear you. Thanks for joining us. So I'll give you a quick overview of my portfolio, and so so far actually I took a bit of a dip the last month, and I'm now actually trailing the FTSE. My portfolio is only up 7% versus the FTSE's of 9%, and I've still got my uranium and oil stocks,
Very good.
which I can't sell because they're not hitting my stop losses I've got for them, even though I consider them kind of in end game territory. But I'm kind of starting to feel like these could be hanging around for quite a while, though.
Mhm.
Then obviously I've still got my gold miners
Yeah.
and the S&P 500, which I had before, and the rock copper, which are all kind of doing okay. We can talk
How's
about the
rock?
rock copper are doing fine.
Okay, Cornish Metals had a bad day
Yes,
today.
very bad day today. Down 13%. So look, you can see how slow my computer is. In fact, I think I'm playing with fire here.
Okay.
So I think I might close that window.
So are rock copper going to get any money out of the Italians?
No, they haven't. So rock copper are, so rock copper still the same as usual.
Yeah.
We're waiting on the court decision with the Italians. Otherwise, we're waiting for Navitas. So it should be by the end of the year they should have their final investment decision.
Right.
So thank you very much for posting rock copper there. So yeah, I mean they're actually one of my better performers this year.
Yeah.
But they're just a speculation on an event. So um, so then also okay, so finally, so then also so I've got 3 additions. So first is Cornish Metals, sorry, who when I did my calculations before, I estimated that we needed a 31,000 tin price for them to be a going concern with
Yeah.
for them. And we recently got a 31,000 tin price, and
Yeah. I saw that.
they released a PEA where they announced 31,000 tin, so as their kind of required price. So I went in for them, and then this has happened. In fact, only the last couple of days, we've been rug pulled. So I wonder. It kind of looks to me a bit like some people who wanted to get rid of a load of shares used this RNS to pump the market up, and then rug pull everyone and sell a load of shares. So I'm
So
30% down on this.
so hang on, bro. Can you just explain the rug pull? Rug pull. What happened?
Well, I'm speculating here because I've seen it.
Okay.
I have seen it happen before. Is that they've got some large shareholders who might own 20-30% of the stock, who might, some of them may have been there for decades or something, you know, and they want to get rid of their stock. And then they could perhaps time an RNS like this as a good time to spike the price up a bit by selling a few shares themselves, and then rug pull everyone by then just selling all their shares to suckers like me. And then in a few days' time, you see the RNS come out of that a major holder of the shares have sold half their stock.
Ouch! Yeah.
That's pure speculation, but obviously, yeah, that's what happens if you mess around with commodities miners, just like
Yeah.
everyone was warning me against last time. So
Yeah. So how much of your portfolio is Cornish metals?
so it was only because it's a wild card play, I only put 2% of my
Yeah.
portfolio into it, so
Yeah.
it's not going to hurt me that much. But yeah, so
Well, must be stock specific because Andrada Mining is basically following the tin price up. Andrada also has lithium, which is not going to be doing anything. But so your Cornish must be a stock specific deal.
Yeah.
oh, thanks. That's very useful info. Thanks. Because
Well, the
here's
CEO, I saw on your chart, though, the CEO leaving abruptly. That's never a good sign, is it?
no, it could be something to do with that.
Mm.
Or it could be something to do with the shareholders. So anyway, I don't know. I think they're quite fun anyway, and I'm just going to wait and see what happens. So that was risky, wild card fun. But then I've got a couple of I've actually opened two serious positions. One is invested in India. One is bank stocks. So India, actually, I was unable to invest in an ETF.
Okay.
This is the ETF I want to invest in. iShares India, which is called Indy.
Yeah, I've got it.
So because I was unable to invest in it through either a pension or looking for a general India pension fund, or by investing in this ETF via my bank, I basically had to resort to using my spread betting account to
All right.
simulate a position. So what I've done is I've simulated a position size as if it
Wow.
was 10% of my portfolio.
Are there really
Um,
no UK listed India ETFs? I'm amazed.
They are, but not with my bank. So my shares provider, who I get my share service off, which is a high street bank,
Yeah.
I phoned
Right.
them
Got you.
up. In the past, they've let me down as well. In the past, I wasn't able to buy diversified energy off them either. Anything a little
No
bit,
bad thing, as it turns out.
no, but they've let me down too many times. So I've been
Yeah.
looking into alternative ideas for that I can invest through, or alternative service providers. But for now, I'll stick with my bank, but for my share dealing, but an ETF dealing. But anyway, so yeah, so this is obviously very dodgy using a spread betting account, but I'm going to take this as it goes. I mean, it's set up so that if the price goes up or down, it would be an equivalent gain or loss had I owned the position that I wanted to buy. So it'll be a bit of a learning exercise. There's a limit to what I could lose
Yeah.
with a stop loss put in place, and let's see how it goes. It's kind of a bit of an experiment, really, because of using a spread betting account to try and simulate a normal position. But anyway,
Okay, can I just come in quickly, Greg?
yeah,
On spread betting accounts, because for my sins, back in the day, I've done quite a lot of spread betting, and I don't do it anymore because I personally found that seeing your profit and loss in red numbers every day affected my judgment. So when if you kind of got, let's say you've got a 10 grand position and it's up 1%, and so that's like 100 quid, nothing. If it's down 1% and it's down 100 quid, you kind of if it was down 1%, you don't really think about it. Down £100, you think, oh god, that's quite a lot of money, and so it affects your. I found just seeing the numbers in bold changing every second.
yeah.
Affected me and made me a much worse investor. And so, not that I'm great anyway, but I gave up.
Well,
Found out.
exactly. Yeah, I've had exactly the same problem. I load up a bit of play money every year, and it never lasts past January. This year, and I actually posted this on your Discord channel. This year, I actually did a spread bet on silver, and then when I when I saw it jumping up and down, I just couldn't keep my cool. Closed the position. If I'd held that position, I would have made an absolute fortune. But I just haven't got the mindset for it. But this is, in this case, I'm doing it in a very deliberate way, and it will come to see, because, if it starts making money, I'm going to have the temptation to sell it. When if it had been the actual ETF I'd invested in, you'd never sell it in the same circumstance. You just hold on to it. So there's all kinds of psychological issues with spread betting, but let's see. It's the only way I could possibly invest in India. I wanted to invest in India, so I'm doing a trial run, but it's one where I keep the position open all year. So but let's see how it works. Thanks a
I'll
lot
be
for.
very interested seeing how you get on. Actually, would you mind updating us? Well, when we go through, because I'd be interested to see if you keep it open for a year, what the ongoing charges are, how much they charge you.
Yes, very good point. And I actually asked I actually phoned up the advisor about this before on a different a different trade. But are you better off doing contracts for difference or daily traded funds? Because I somehow thought the contracts for difference were more designed for long term. However, basically, he couldn't really explain it to me in a way that it was almost like he wasn't used to people asking questions like that. So, yeah, I'm going to keep track, because what I can do is I think I paid like a 2% loss when I made the initial trade. When I opened the trade, you lose like a 2% loss or something immediately. The question is, if the price of the ETF goes up 10%, will my spread bet go up 10%?
Yes.
That's the question. Because is it that with the daily faded funds, I think they take away a tiny amount every day. So if I start seeing a significant mismatch, I'll know. And maybe people can comment if they know about that. So thanks very much, Simon, for clearing the mystery as to why my high street bank wouldn't let me buy deck. Um, that
because I followed up on your ETFs, and the ones you listed on your that you published the last time, I think it was, and I followed up a bit on Larsen Toubro, which is actually quoted in London, but you only get prices on a Monday every week, strangely enough. Anyway, the ETFs I found I couldn't invest in either because I'm a UK citizen. I do have a brokerage in the US, but when I tried to buy a US ETF, it flags me as a UK resident and says, I'm not qualified to own these ETFs. So I looked around to see if there was any European ETF, and they don't appear to be, in fact. The nearest you can find normally with non-US ETFs is that they replicate in Ireland their US ETF. But for India, there doesn't seem to be any opportunity here.
correct. And actually, this is a good sign, I think, because there were dozens of China ETFs, and also when I look at the pension fund menu, half a dozen China pension funds I could have got. So I'm actually going to keep a table of how many China and how many Japan ETFs there are and pension funds available. And currently that's 0 for India. And when the day comes that there's dozens of India ETFs and pension funds available, then that might be the time to sell.
It's completely arse about tit, isn't it? You don't have the availability because we're told it's too risky, and then when everyone else offloads the stuff, it's too risky again,
Yeah.
so we don't get a chance.
But so that, well, I think it's a good sign that there's no ETFs available. It's and so what did you mean by Larsen Toubro? Was that a post in the chat? Was that one of
No,
your
it was
recommendations?
it was on one of your slides. You had the ETFs, and then you had this company called Larsen Toubro, and I looked it up, and it's a kind of engineering consultancy, an Indian engineering consultancy, and it's actually quoted on the London Stock Exchange under LTOB, I think is the ticker. So I charted it on IG and could see it, but it only prices itself once every week on a Monday. It's in a good trend, but it's just recently fallen out of the trend. So that was my only avenue into India, to be honest, from what I could find.
So, sorry, hang on. Simon, these shares that only price once a week on a Monday, I mean, are they listed on the London Stock Exchange?
Yeah.
I've never heard of that.
Neither have I. No, absolutely not. But I can only get this only seems to be, if you plot the daily chart, nothing happens. And the only time you get a prize ticker is on a Monday at the beginning of the week. So I don't know what's going on. It's definitely an Indian stock which maybe has a dual listing in London. I haven't dug further, but yeah, it's really weird.
So actually, so now I understand that was from my list of the top Indian companies where I had.
Yeah.
And actually,
Yeah.
that was one thing I didn't do, which was look them all up to see if I could buy any of them on the FTSE. So that's interesting. It might be worth seeing if I can pick out any others that might be listed. There is
Yeah,
one.
the other ones that you listed are available to trade, like the Indian banks. You can trade them as ADRs in the US. They're not tradable in London, as far as I can see. Larsen Toubro was the only one I could find in the UK. But one or two of your other ones are tradable as ADRs in like Infosys and stuff like that. I mean, Infosys dates back to the .com bubble. So yeah, those are available in the US.
So yeah, so there is actually one stock that's FTSE 250 stock, the JP Morgan Indian ETF, but that performed so horrendously against the benchmark that I wouldn't want to invest in it anyway. By the way, I'll just mention. So yeah, so let me load up this again. So let's see how that goes. And then finally, bank stocks. So I'm only a third in at the moment. I bought some Bank of Cyprus holdings, and I'd noticed this ascending triangle when I bought them, and then they've since burst out of that in a nice way. Now, actually, all of the banking stocks are going up at the moment.
They are. Jesus.
And I'm probably going to be buying some Barclays next, but I'm kind of actually, one thing is I'm a bit late if you look at this time scale, but then if you look at a real far out time scale, it could still be early. But I'm probably going to. Problem is, I feel like months of works to do still, but I'm probably going to go in for Barclays anyway next week and not complete until I've finished all my work. But I'm kind of in a way kind of jumping before I'm ready a bit because of what's going on in the sector. And yeah, that's all I'll say. I mean, so thanks a lot for putting up Barclays there. So yeah, so I guess I'll just summarize that. I think we'll come on to next to the inflation interest rates generally.
Yeah.
But I think I'm placing a bet on interest rates staying higher for longer, and I think that will be good for banks. And then also, it's a lot cheaper to run a bank now than it was because of modern technology. And finally, banks have been a really hated sector for ages, and I think they've just become fashionable. So those are my kind of three reasons. So that kind of completes my update of my portfolio, what I've been doing, and so we can move on to the next thing.
New highs.
Yep. So we're back at these crazy highs. So I currently have us in this all hail New Keynesian economics trend line, and it's when we look at the macro. No, I haven't. The macro, which I've got here. So when I look at the macro, we have inflation is still kind of high because this 0.6% per month, that equates to, that in just 1 month would be 6% a year, 7%. Wasn't there actually CPI results out just a few hours ago in the US?
Yes. Yeah. So US inflation came in soft on a month-on-month basis. On a year-on-year, it met expectations at
But
3.4%.
the thing is, though, wasn't
Um,
it still 0.3%? So that's
Month
still
on month, yeah.
over
Um,
3% a year, isn't it?
yeah, it is. Let me post it. Hang on. But the thing is, Greg, I mean, so every week on the weekly, I cover this, and a lot of the inflation persistence in the US is down to, lag effects. So it is shelter, which is lagging, and it is car insurance, which is, a function of changes in driver behavior. If you click on that, you'll see that, a huge part of US inflation is basically shelter, which is lagging, and core services ex shelter is almost entirely car insurance. Let me bring up the other chart. So if you, so I'm going to bombard you with charts on inflation now, but if you, so this one is core, super core, which is excluding shelter as well as energy and food, and you'll see it's all the light blue lines. That's car insurance. If you actually use real-time rent inflation numbers instead of CPI shelter, which is mainly owner's equivalent rent, which is this ludicrous lagging indicator, then your US inflation is actually below 2%. So, I have been arguing for a long time now that the US does not really have an inflation problem, and I stick to that.
Okay. So,
However, having said that, I'll cover in the weekly, shelter inflation is probably likely to be bottoming in the next few months, and then is likely to pick up in the second half of the year, because the way the US calculates shelter, it's highly correlated with house prices.
yes,
PHS,
thanks for
thanks for
joining us.
joining us. Sorry to miss you.
So I tend to go just on my very basic numbers here, but it's always a nuanced science, I guess, in predicting inflation. But it's not like crazy out of control, but it's not. You're saying it looks like it's going to hit target. But even then, they're not going to.
Well, actually, I'm not saying. Hang on, though. I'm not saying that. I'm saying that the underlying drivers of inflation are not being caused by excess demand. So the big ones are. So, if you look at the supercore, that's all car insurance. And car insurance is going up because of changes in driver behavior. Keeping interest rates high has no effect on car insurance prices, because that's basically the US drivers driving, reading their mobile phones, not paying attention, and having more crashes or deadly crashes. Raising interest rates, that won't affect that at all. That's going to keep on rising probably for the next year. The expectations are they'll rise another 7% this year, sorry. So inflation actually is likely to stay above trend. It's not going to come back to 2% for a while because of these.
So the funny thing is, despite the relatively high inflation, we've still got low unemployment and amazing GDP growth in the US. So really things are kind of looking good, really, in the US, but there's something that seems not quite right. when you so when you look at the how the economy's working, the stock market seems to be able to do great even when the people are kind of struggling a bit. But generally, the US economy doesn't seem to be doing that badly, really.
Yeah, I think there's another leg up for the S&P 500 to about 5,400, 5,450, maybe by the end of the year.
Wow.
If it gets there sooner, then there'll be a leg down. But I don't know what. I think the presidential election might create a leg down. But I think if we break above in the next few days, we're off to 5,400, and that'll then be the top of the very uppermost trend line, which if you're circling it now on your screen. If you take the two peaks and draw a parallel line to your blue line in the middle, that'll be the upper. Yep. Carry on from exactly. No, draw it parallel to your blue line. You're presuming that's the top. You're presuming that's the top now. But so yeah. Good. Yeah. Take that parallel. That's it. Something like that. It needs to come down a bit. Come down a bit because you're not parallel to your blue line. Come down a bit, and then you'll. Yeah. That's the way to do it. Yeah. Exactly. And then move that to the top of the original last. No, the previous one. Yeah. Exactly. Yeah. And if you then take the current trend, that should be, certainly on my charts, it's about 44.50.
Wow,
sorry, 54.50.
See, that kind of makes more sense than this being the new normal, because the yield we're getting. So this here, the actually slightly supercharged trend line from historical was giving a 16% yield per year. This line here gives us
That's correct.
41% yield per year. So it
Yeah, that's right. It's super. Yeah, exactly. As you say, that's
so this
super
gives us a
super high. But I mean,
So look, that would be reassuring if we would kind of.
I think we broke to new all-time highs today, so that's good news in the next week. And if CPI inflation comes down again in the next month, then this will continue into
Well,
summer.
so do you expect it to? So you're saying you expect it to bounce off this red line, or you said 54, 55?
Yeah, ultimately, I think if it gets to the red line, which for my projection would be at 5,400 or thereabouts, then it'll potentially crash. Actually, I mean, on a reversion to the mean basis, we need to get back down to the 16% growth trajectory at some time. I don't know what the catalyst's going to be for that, but I think we're in portfolio matters. Keith would call it overbought territory or hype territory. But we have to play it as it goes,
Yeah, exactly. Play it as it goes. So I guess my kind of base assumptions will be either this 16% yield in the long term, or it might be perhaps that we have some kind of AI bubble or something that pops to then get us back down to this. But who knows? Who knows? For us, it's nice being in along for the ride anyway. And if it wants to, if the ride's the 41% yield per year ride, it'll be fun for a while. So yeah, so if I go and have a look at the S&P 500, this is actually a monthly update, because I did a Q1 update most recently, which I've got down here. So here I've got the different sectors and how they're doing. So I've got Q1, and then this Q2 is actually just the month of April. So we can see that actually the internet portals have been doing well still, as have computer hybrid companies. The computer hardware companies, and that includes Apple, not so well. The car, that includes Tesla, by the way, but the automotive sector is having a nightmare. Credit cards are doing well, Visa and MasterCard. Insurance doing well. So it's kind of there was a time where it seemed like the FANG stocks were going to have some sense knocked into them, but it's a bit only the case with Meta and Tesla. So how's Nvidia doing, Simon?
It's been going sideways for the last month or so. It's been kept in its box by conflicting evidence from other chip stocks that have got nothing to do with it, in my view. And today it's just broken out a bit towards its all-time highs. Pre-earnings, 22nd of May, usually sells off pre-earnings, because guidance is usually conservative, and if you want to buy some speculatively before earnings, go ahead. Target
Nice.
price is 1,200 for me.
So okay, so I think that's done the US. So they're the UK, and we are also in a all hail New Keynesian economics trend. So this looks like it was a double bottom after all, and it looks like we've found a new direction. And when I look at the macro for the UK, so obviously we're tamer than the US, but our CPI inflation actually, the last two counts were 0.6%. So according to my metrics, we're still a bit on the high side, and so I can't see the Bank of England cutting interest rates.
Hang on. The thing is, UK CPI is not seasonally adjusted, and US CPI is seasonally adjusted, as is the European CPI. And when you look at the numbers, the vast majority of UK CPI inflation comes between February and May. And so you're seeing right in the middle of that now, these 4 months are the majority of UK inflation. So generally, January is always negative in the UK, which is kind of odd. I don't, it's maybe that's the January sales, but so we have a negative January and then positive February, March, April, May, and then it goes down. So, high CPI prints in February, March, April, May.
Okay, so you think
and then it should subside.
We could be in proper stagflation then by the end of the year?
No, I think UK inflation will come down. I mean, the Bank of England, a reminder, in April, we got the step down in UK household energy costs. And so the Bank of England is forecasting that actually UK inflation will hit 2% by the end of this quarter. So the June inflation number, it will then rise again.
So we are kind of
in
in a safe
Q3.
zone here. As long as it goes down, maybe in a couple of quarters, we could be in like a safe zone year on year. So okay, so let's say we've got okay inflation. Do you expect a central bank pivot then in the UK?
I hope so, but not. The thing is, wage growth is too high in the UK. Wage growth is just not coming down, and so I don't think. I mean, so when you talk about the UK economy, I find the UK economy incredibly puzzling at the moment, because we've got GDP growth. If you look at Q1 GDP growth, so you had the economy grew every month in the first quarter, but it also lost jobs. So how does that work? You have rising GDP, losing jobs. That is only possible, or should be only possible, if you have rising labor productivity. Yeah, because you're producing more with fewer workers. But labor productivity fell. So basically,
it may be one of these Mag 7 kind of stories where a lot of the productivity is occurring at the top end of the S&P 500, if you see what I mean.
Yeah.
And these folks are laying off a massive amount of staff.
But then their labor productivity is rising, Simon.
Sorry?
Then their labor productivity has to be rising. They're producing more with fewer people. Their labor productivity should be rising. And the data for the UK is the labor productivity actually fell in the Q1 when GDP rose and we laid people off as it in net.
Now, actually,
so how does that work? The numbers
looking at
the
FTSE 350 here,
I don't know.
We do see that the likes of AstraZeneca and HSB Holdings are making a difference, well out of proportion. So
yeah.
This is a bifurcated market.
So if you click on the chart I've just posted, which is the Bank of England's inflation targets forecast, you'll see what I mean. Their forecast, inflation will come down and then will bounce.
I do wonder how realistic that is, because of the cost of, because of the Suez Canal being shut off.
Actually, on that point, today the ECB lowered its inflation forecast for year end 2025 from 2.7% to 2.5%, and they explicitly said one of the reasons they were lowering their inflation forecast is they'd been anticipating more price disruption because of the events in the Red Sea. So the ECB don't think the Red Sea is as big a deal as they have expected.
Do you feel we're in for a mini recession then, or everything nice and balanced? Yeah.
In the UK, I just don't know. That the numbers are just totally contradictory. We're getting GDP growth.
I know, but
we're also losing jobs.
You could easily have 5 or 6% unemployment.
I just don't understand.
And that would be perfectly normal for a modern economy. That wouldn't be.
Well, but that rise in unemployment should slow the economy, because those people who lose their jobs cut their spending.
I mean,
that's how
it kind of could be a tame economy, just kind of not bad but not amazing like the US. So yeah. And of course, and there's a big
US is doing amazingly well.
it's completely kind of unequal, where the money is. The GDP number, it doesn't tell you about everyone. It only tells you about specific concentrations of where the money is, I think. So, but as far as the stocks
I agree with
market's
that.
concerned,
Yeah.
the stock market doesn't seem to care about that. So we're and
I know.
so
Yeah, I know.
so
It mystifies.
well, okay. So before I start my discussion on money, has anyone anything they want to bring up or anything, or any final comments on that?
No, good luck. FTSE 250 is still a long way behind its previous highs. If the UK economy does turn around, FTSE 250 should do well. But currently, the puzzle with the UK is the IMF has forecast UK GDP growth of 0.5% for the whole of 2024, and in the first 4 months of the year have had 0.6%. So, what's going to happen? Are they forecasting the UK economy to slow down from here? Or is the UK economy just going to do much better than everyone is
I feel like
expecting?
the more I study, the less I understand, I feel.
Well, yeah,
Yes.
you and me both can't.
That's common with age.
Okay, so let's get this up there. Money. I think Dan Lee. I'll just see what Dan Leeds is saying, but Dan agrees with the two-speed economy. So, okay, so money. So
Yeah.
right. So to start with, there's two primitive instincts which explain why money. See, like money, it is a very important part of everyone's lives, despite what people say and what the Bible says. It really is. Money is kind of at the center of most people's lives, really, or just how humans exist. It's a very important part of people's lives, like it or not. But this can be understood if you go back and think of the basic instincts of barter and debt. So to barter is a basic human instinct. So I think back to when I was in the playground at school. It's just basic human instinct to hey, I'll swap you a marble for a couple of packs of crisps or something. To barter is just a basic human behavior. And so is debt. I mean, even before it's such a basic human thing to say, oh, can I borrow your calculator? And then I'll lend it you back. And it's, I've got a comment there. Let's have a quick look. Cyber says, money, a form of currency that we don't have enough of when we're young, but have too much of when we're old. And it's true. The money's no good once you're old, really.
Yeah, that's true.
And so these are basic human instincts, actually. And then what happened is there's two types of parts to money. There's medium of exchange, which is essentially what do you use as money, and then there's money of account, which is basically tracking debt and transactions. And yeah, it's true. So it says, sure, if it's sticking in a bank account, and that's very true. And so the first type of money that developed was commodity money. And so, okay, Aldo, first of all, I'll just go through some basic properties of money. So money has to be fungible, which is its units are interchangeable. Durable, so it's able to withstand repeated use. Divisible into smaller units, so you can buy penny sweets if you need to. Portable, so it's easily transported. Acceptable, so that most people accept it as payment. And scarce, so the supply is limited to a practical level, that it has value.
Yeah.
And all money, all things that use the money, have these properties.
Yeah.
Just a little story on that. When the Soviet Union fell apart after Gorbachev, and I think into who was the next guy, but people were using Levi jeans as money in the former Soviet Union to use as payments and for buying
It's amazing.
factories and
And that's kind of like,
transferring
say, how in
money from the west to
Argentina,
the east.
people used the US dollar, or in Zimbabwe. You at the end of the day, if your currency gets debased enough, you can't stop people from finding alternatives. They always will.
Yeah.
Yeah, exactly. Yeah, exactly. In Zimbabwe now, I think there's a whole system of monetary transfer through gold, which is produced in the country and disappears through the economy out to the external world. So yeah, there's always a way to do business in these
And I just
difficult
love these
economic
situations, or
non-fiat
thinking about these
currency
situations where
economies.
people use commodity money. So another example would be Panini stickers, Panini football stickers at school were a commodity money. They were used as money at school. I don't know if that was the case with anyone else, but it was with me. Let's have a look. A comment here: playing card money. So yes, so let me let me close these because I need every byte that I can get out of my computer at the moment. So Keith recommends the book Read Plenty by Francis Spufford, a novelization of the Russian economy in the 60s and 70s.
Yeah. It's great. Doesn't sound like great. Sound like a very promising, but it's really interesting. Can I just a brief aside? Okay, so it was a command economy, and they said factory C bosses had to meet various targets. But for example, the boss of the factory making tractor engines was given a target of producing not so many engines, but so many tons of engines per annum. The inevitable result, they produced a few
Yeah,
very heavy engines.
so it's like a natural instinct for people to then. It's more convenient to find a unit of account of a type of commodity money that you can barter, that you can use as an alternative to barter. And in prisons,
Just a quick, Yeah, just a quick story to add to Keith there. When I first went to the Soviet Union doing deals for oil and gas, the hotels I went to, the lifts all went to the 16th or the 20th floor. But if you press the top floor was 8. So all the lifts were produced with numbers to
So
the
it's all
20th
about
floor, and
all
there were
about
never
image.
any.
So
Yeah.
so in prisons, apparently, so obviously cigarette packs were commodity money. Apparently now, ramen noodles are the most common commodity money in prisons. And then we have the cowrie
Yeah.
shells, and and then after the invention of metallurgy, people started using gold coins, and the first were the Lydian kingdom, which dates back to 560 BC, and they created these. Their capital, by the way, was Troy, which I wonder if that's where the word troy ounce comes from. But they produced electrum coins, which were a mixture of gold and silver, and these were the first ever commodity money in the form of coins. Actually, the very first known commodity money was the shekel
Yeah.
in Mesopotamia, which was actually a weight of barley. Um, so yeah, so we have commodity money, but of course, commodity money it limits the size of the economy because there's a limit of how much that exists. So the next step was following the invention of paper, representative
Mm.
money. So the yes,
Actually, sorry, Ray, but can I quickly come in on why you need money? So barter is really inefficient because economists say
yes,
in order for barter to work, you need a double coincidence of wants. So in your example, the guy in red needs sheepskins and the guy in blue needs a coat, and they need them at the same time. And so, in order to do that trade, you have to go round. If you've got 3 sheepskins, you have to go round finding somebody who wants them. As opposed to if you have money, then you can sell them and they can use the money for something else. You only need one coincidence of want. So
and
that's why
thanks, Simon.
money has
You're saying
evolved
that
very
according to
quickly
Google, the troy
everywhere in the
ounce
world.
originates from the town of Troyes in the 16th century. Is that in France? Um,
Yeah.
so
Yes.
so okay, so
Yep.
okay, so obviously people started they'd get notes when they left money in the bank, their gold coins in the bank. So people just started using the notes as money. And then that then became useful because it means you could actually have it would support a larger economy than just having notes themselves. So than just using the commodity money itself. And so that's how you come to representative money. And the first now there's some examples going back to Mesopotamia and stuff, which like clay tablets and things. But in terms of paper, the first representative paper money was the Chinese, 118 BC. And then I've got here this this European banknote. So this the first bank to use banknotes was Stockholm's the Swedish bank Stockholm's Banco in 1661. And then down here I've got a £50 note produced how they used to look like in 1732 at the Bank of England. And something I found out that's interesting was that, by the way, all of these it was representative money because you could take it back to the bank and exchange it for gold. Here, I've got
Yeah.
it isn't actually representative money, but here I've got, oh no, it is actually still, I think, yeah. But here I've got a £5 note from 1921. And basically it turns out that it used to be that all banks produced their own banknotes, issued their own banknotes. It wasn't the Bank of England. It was hundreds of banks throughout the country would just start issuing their own banknotes, and which were measured in pounds sterling. And what happened was the Bank of England started clamping down with this. There was an act in 1694 banning any new banks from doing that. And then the last surviving bank was this Fox Fowler and Sons, with this being one of their £5 notes. And then when they got took over by Lloyd's, that was the end of anyone else being able to issue money apart from the Bank of England. So, so we have a situation, a larger economy where people are using representative money, which was always backed by gold, the gold standard. But then actually, there's different ways of looking at it. But one way to look at it is the economy just got, because of other inventions, which I'll go to in a moment, the economy just got too big and too fast to be backed by gold anymore. Because if you're doing trades using telephone system across the continents, you can't move gold that fast, if you know what I mean. So people had to switch to fiat money, but there may be other reasons of just, I guess you could, yeah.
Can I come in there, Vogue? Actually, I would say that the reason the gold standard failed is that the supply of gold failed to keep up with economic growth. And so you would basically, in order to maintain the flow of money in the system, because there wasn't enough gold, you got this huge increase in credit notes which were nominally linked to gold. So the amount of credit in the system was vastly higher than the actual amount of gold. And so whenever there was a crisis, then people would try and cash these notes in for gold, and crises ensued. So basically, the fundamental problem was the supply of gold needs to keep up with GDP growth, but it wasn't doing that. So hence the gold standard was, restricted the supply of money that the world economy needed, and led to, successions of crises until we came off it.
So what you're saying is you needed a supply of physical to keep up with the price mechanism didn't work, basically. Is that what you're saying?
Yeah, what I'd say is basically, if you'd adhered to the gold standard, then you would have had to have constant deflation, because your money stock is not changing as fast as GDP growth. And one of the problems with the gold standard is there is no central bank, essentially. So interest rates are set in the market And real interest rates tend to go down when there's a boom, because credit basically expands, and your cost of money in the gold doesn't change. And so the gold standard economies are very prone to boom and bust. And then you get real, because the money supply doesn't change, the effects are felt by the real economy. And so you get, if you look at the data, the volatility of GDP growth was much higher under the gold standard than it is under a fiat currency system, although it might not feel like that. If you go and look at the data, it's very much more volatile. And so if you think about the Great Depression, that was under the gold standard. And the reason that the economy was not really very self-normalizing was that people took all their gold out of the banks. And so the banks couldn't then resupply credit to the economy because they needed gold in order to produce loans. And so, they couldn't just print money in the way you can in a fiat currency system.
Okay, great. Yeah,
thanks.
good explanation. I've never heard that, and now I'm much the
So
wiser.
we get
Thank you.
from the move from representative money, which could be exchanged for gold, to fiat money, which is not backed by anything. And so actually in 1870 was when governments introduced the gold standard as an official thing. And then during the Great Depression, it forced most countries to become fiat. So actually, this kind of gives some complexion on what you just said. So actually, in the US, sorry, the UK, following the end of the First World War, basically they had to become fiat because they couldn't afford to be non-fiat anymore. And then gradually you'd get different countries switching to fiat, and only the US remained. And actually, at the end of the Second World War, the US, everyone did a deal with the US because the US had most of the world's gold, over 60% of the world's gold, because they'd been enriched by the Second World War, and everyone else was completely poverty stricken because of the Second World War. And so they kind of did a deal with everyone where the US dollar would become the reserve currency, but it would be pegged to gold. And this was the Bretton Woods Agreement. And then in the 70s, even the US economy couldn't really still work pegged to gold because of some of the things we've been discussing, and also anyway. And then in 1971, the US ended the Bretton Woods Agreement, and so from that point onwards, all currencies have been fiat. And there's an interesting thing here about the unit of account, because the whole world has a kind of unit of account which is the reference, so that the rest of the financial system hangs on. So obviously, within a country, the unit of account in the UK is the pound sterling, but that is kind of subordinate to the US dollar as the kind of dominant world reserve currency. Even though our currency is pound sterling, is the official unit of account, we have to buy lots of US dollar so that to have as foreign exchange reserves, so that people trust that pound sterling, so that we can even have it as a unit of account. So it's interesting how through time the kind of reserve currency unit of account has changed. So it was from being gold to the Dutch guilder, to pound sterling when the British Empire was kind of ruled the world, and now that the US has rules the world economically, it's gone from the US dollar being gold back to a fiat US dollar, and so now the fiat US dollar is kind of the world's reserve unit of account. And so that's where we get, so that kind of completes the this medium of exchange part. And I've got a comment here from PHS. He could be helping me out there because I was kind of freewheeling a bit there. So central bank, PHS says central banks provide liquidity in return for quality assets, even if other source of liquidity dries up. The pound is one of the very few reserve currencies, along with the US dollar, euro, yen, Australian dollar, Swiss franc, Canadian dollar. Yeah.
Sorry, Ray, can I just come in quickly?
Mm.
Sorry, Ray, can I just come in quickly? Because while freewheeling, I got part of the explanation about the gold standard wrong. Well, I say that there's no central bank who sets interest rates. That is entirely wrong. There is a central bank under the gold standard. They do set interest rates, but the reason that the gold standard exacerbates booms and busts is that their aim is to maintain the gold standard, so that the currency's ratio in gold. And so if you imagine, so let's say England, the British economy is booming. And so lots of investments flows into the UK economy, lots of gold flows in. So the UK then has too much gold, and it then will tend to cut interest rates to deter further inflows of gold. Cutting interest rates when the economy is booming is very bad, because you are then overstimulating the economy. And then when there's a bust, foreigners take all their gold out. And so in order to try and retain gold, the Bank of England will have to raise interest rates when the economy is crashing. So under the gold standard, you tended to get interest rate cuts when the economy is booming, interest rate rises when the economy is busting. And so you had a kind of pro-cyclical interest rate policy. Hence, the economy was much worse, much more volatile under the gold standard. Sorry.
So I guess kind of main key points from this is it's just an explanation really of how we now have money which doesn't actually represent anything, isn't backed up by anything, but it is kind of backed up by trust in the government. So, and so the US has got a big navy, really big economy. It can, it knows it can generate so much taxes every year, but it's still, quite, quite incredible stuff, really. That that the money that we use, the fiat money, doesn't actually represent anything, but this is the money that we use. So Tipster says that Zimbabwe has a new gold-based currency backed by gold in the ground, and someone was telling me about this. I was on Twitter. I was on Twitter Spaces, and someone was telling me about this. I think it's gold, but yeah, it's a gold-backed currency.
Yeah. But I think the fundamental point, Rogue, is that fiat currencies are backed by
Yes.
confidence. They're backed by confidence they'll retain a store of value. And so hence, inflation targeting, we can money's incredibly useful as long as we retain confidence that our money is going to retain its value, we continue to use it. The reason that Zimbabwe has trouble getting
Yeah.
its new gold-based currency adopted is nobody has any confidence in it.
So,
Fiat
okay, so
currencies
in terms
are
of money of
crucially
account,
rely on
so
confidence.
barter obviously is the one instinct which leads to money. Second one is debt. I'll just quickly see. Oh no, I thought he'd finished his sentence. So, okay, money of account. So the most basic form of debt, obviously, is where people give verbal promises to each other. Can I borrow a tenner off you? I'll pay you back next week. So initially, after the invention of counting, people started to use tally sticks, and I've got here. This on the left is one dating from 20,000 BC, and
Yeah.
eventually these then, when we get to medieval times, they get a bit more sophisticated, and you'd have notches on them, and you'd snap the tally stick in half, which would then mean that when you next met to the depth, because obviously if you were a merchant or something, you may be lending lots of money, lots of people money. When people come back, you can match the debt by matching the broken halves of the stick, and then on the stick would be how much you're owed. Oh, and by the way, the half that the creditor would keep was called the stock, and apparently that's how we derive the word stockholder from. Apparently, so so tally sticks. Initially, there would have just a tally on them because before Roman numerals were invented, people just used to use a tally. And then actually people started using Roman numerals, and then Hindu Arabic decimals later on. Um, so so we get this. This allows for certain kinds of economic activity, and actually for there to be banks, you need like to be able to keep tallies. And then there was a big advancement with the ledger book, but actually, probably more as important as the ledger book was double entry bookkeeping. Um, so, because really, you couldn't properly run a big bank or big merchant, a big textile merchants in Venice or something of a certain scale until you had double entry bookkeeping. And this was invented by Luca Pacioli in 1494. And the thing about what what was required, and actually there are some parallels between this and Bitcoin, because the inventions for Bitcoin had already existed for 5 or 10 years. It was just that Satoshi combined them to invent blockchains. And the same here, these inventions had been around, but it was this guy made this invented double entry bookkeeping by combining previously known inventions. So obviously you have being able to use paper, but also the invention of Indo-Arabic numerals, because in Europe people used to use Roman numerals, and obviously Roman numerals are very difficult for accounting. But with the Indo-Arabic numerals, which are the numbers we use today, it's a lot easier to add and subtract. And then also he introduced the concept of double entry bookkeeping, where you record every transaction twice as a debt and a credit. So this allowed for records and auditing to be scaled, creating a much larger network of money of accounts. And actually, double entry bookkeeping is regarded as the birth of capitalism. And it explains how banking system rapidly spread throughout Europe during the Renaissance. And that's got on the cover there. So this is an interesting thing because with then of course the next step was you have your ledger book. The next step is a database ledger on a computer, but this is something that I don't think I quite grasped myself until really digging down to the details. Like I think like most people, most people think of money as in really as commodity money, but really as at least as fiat money. You know, you kind of think of money as something that exists, as something that's created and has a kind of physical form. But the reality is that actually money, you know, okay, a pound note in your hand exists, and a digit on your balance on the screen of your, when you look at your bank balance, the numbers on the screen kind of exist, but really that's the only way they do exist. They don't really have any backing. But then also the entire economy, and then when you think of things like GDP and stuff, and money, how it is in the economy, it only exists as debt. It only exists as entries in ledgers.
Yeah.
And that is just
Mm.
you know, crazy. You know, it's just
Yep.
amazing, really. So then of course, when we get to 1959, Barclays bought the EMI-DEC 1100, and that was the first time a computer was introduced to the UK banking system. It had 4K RAM and magnetic storage disks of 20K. And then eventually, when you get to the 1969, that was when banks had computerized. They were called corporation accounting machines, but they were basically these computers at every branch. And for the first time, um, the customers' transactions would be relayed to head office. So before the 70s, um, your local bank branch, let's say you lived in Tunbridge Wells, or you lived in Ludlow, or you lived in Totnes, or wherever you lived, whatever town or village you lived in, that bank branch was the only place where your bank details were stored. And this is very interesting for me because it really does show how much the economy has been expanding since the turn of the century. Because when you consider then how slow things were to now, it's just astounding, isn't it? The difference. Um, so
Mm.
you know, I mean, so then you'd pay for things by check, and I love my check. I love using my checkbook. The rare occasions, which is normally
Yeah.
normally family members' birthdays and things. But but I love my using a checkbook. But you've gone from a time here where there's you'd pay for your service with a check, to now where you swipe your card. It's amazing, really, the differences. So yeah, so then we go from database ledger, and now we've got blockchains as a potential new way of recording transactions in banking. But actually, I don't think it. Well, yeah, Bitcoin won't. Blockchains will. So in 2008, Satoshi Nakamoto published the Bitcoin white paper. So now, if we have time, I can actually go into Bitcoin in more detail later if we've got time. But I'm just going to skim through it, okay, for now. But got a
Sure.
comment there. I'll just first of all look at this comment, and we'll get back to Bitcoin. So PHS says, when the economic conditions tighten as part of the regulated business cycle, credit contracts as people attempt to redeem their paper money with specifics, i.e. gold. As gold becomes scarce and people keep hold of their gold, the money supply contracts, leading to major depressions. And he's given some examples. These could last for 20 plus years. The first two were relieved by a large increase of the gold supply due to the finds in California and Australia and South Africa, which injected new base money into the system. In the 1929 case, the depression only came to an end as countries dropped off the gold standard. That and the lead to World War II. So that's great context. Thanks a lot, PHS. And it's almost as if the world hung on to the gold standard and representative money here, this bit here, even though it suffered really bad depressions, it hung on to that, and then it almost by chance switched to fiat. But now that we've switched to fiat, it works great. You know, so even though it's represented by nothing, so so okay, so Bitcoin. So Bitcoin is a digital timestamp server, and every transaction is recorded on the blockchain ledger. So just like you have a ledger book, pen and paper, on a blockchain, on a Bitcoin block, it has every transaction that's occurred recorded. And now what happens is you get, I'll skip ahead to the bonus slides, but you basically, so you have like a chain of blocks. It's called a blockchain. And so you've got every transaction that's ever happened by everyone using Bitcoin since it started is on this chain. And then what you do is every 10 minutes, you record all the new transactions that have happened in those 10 minutes and add it to the blockchain. And so the best thing of the best thing with the blockchain is anyone can check that the record's correct. So you don't, at the moment, you have to trust your bank to not fiddle the books well or not make a mistake. Well, with a blockchain, you don't have to trust anyone. Anyone who uses it can check every transaction that's ever been made and also check their own transaction. And also, it uses a concept called proof of work. So with some blockchains, they're not proof of work. So Ethereum is an example. It's and so it's kind of controlled by, or okay, I'll put it this way. So a blockchain, a CBDC, which is a blockchain controlled by the government, they're not using proof of work. It's centralized, and the Bank of England's you're going to have to trust the Bank of England not to fiddle with people's transactions. But with Bitcoin, because it uses proof of work, it's impossible to change the transaction record. And proof of work, just briefly, is the blockchain is added, new blocks added to the blockchain by Bitcoin miners who use millions of pounds worth of electricity to do hard maths calculations in competition with each other. Yeah.
So, well, because you understand blockchains much better than I do. So, how do I, if when you talk about the blockchain verifying new information, I mean, what happens if a
So
false
what
piece of
happens is
information gets written into the blockchain? I mean, who verifies it? I don't quite understand.
the network, the Bitcoin network, has miners in it, nodes which are called miners, and they basically only the miner. What happens is they're in a race to calculate the transaction record for the latest block using complex maths that cost lots of money, of energy to do.
Yeah.
And eventually one of them wins the race, but then the others, but then that block is only added to the blockchain once all the other miners agree that it's completed the block. And that's because they can check that the information's correct quicker than they could kind of do a con. And also the reason is because all the transactions that need to be put in the block, everyone can see. So I've got, actually, if I can, it's worth the risk of blowing up my computer. There's this wonderful website that visualizes this called Blockchain Visualizer. So I'll show you this. Oh, here we go. So there's this website called TX Street, and let's hope this doesn't blow up my computer. So, okay. So it's given me a choice of two. Okay. So this is txcity.io. Oh, okay. We're obviously this is a Bitcoin channel now, Keith. We've got unicorns and flying pigs. So right. So this is amazing. So here you've got okay. I don't like Ethereum, and I'll turn it to Bitcoin Cash. So here you've got each block of the Bitcoin transaction. Okay. So the right side is Bitcoin, the left side is Bitcoin Cash. So here's the block that's being mined right now as we speak. And inside you can see all the transactions inside the bus. I don't know why the previous block has people in it. But anyway, so what happens is this is called the mempool. And this is all around the world now, people are transacting with Bitcoin using Bitcoin wallets, and then transaction gets announced on the Bitcoin network.
Yeah.
And so here you see the queue of all the people, all those transactions queuing up to be added to the next block. And currently miners are mining this block.
Yeah, no,
When
I
one
get
of
all
them
that,
wins,
but
that block will be accepted and then is permanently recorded. And you wouldn't be able to change if you were to change a previous transaction, to do that, you'd be a miner and you'd basically snick in a false transaction to say that you had 1,000 Bitcoin in your wallet that you didn't have. But the problem is that if you did that, you've got to do the proof of work not only for this block, but also for all the previous blocks. So it's kind of a mathematical impossibility. The only way you can do it is by what's called a 51% attack, which is if you have 51% of the hash power of the total network, you can 51% attack the network. But that's kind of practically impossible for various reasons.
But hang on. In order for this whole system to work, though, you have to the transactions coming in on the right.
No,
they all have to be presumably from trusted sources.
It's completely
I can't just write
trustless.
in that,
So
somebody's given me 5,000 Bitcoin.
Everyone, obviously, in order to interact, you need to have a Bitcoin wallet that follows the Bitcoin protocol. But apart from that, so all the users of Bitcoin, you don't trust the person you're transacting in. Nobody trusts anyone because here you go, the block's gone. So because this is the next block, and the reason is that it's not done on trust. It's done on competition and not trusting people. So whatever creates the next block is purely a function of who had the most hash power. Sorry, who created the next block by doing the work, the proof of work, by solving this mathematical puzzle. So you're not trusting anyone. It's not done on trust at all. It's done on competition, and it's actually done on not trusting people.
Okay.
Maybe someone else can explain it better than me. But
right.
By the way, this is Bitcoin Cash, which doesn't have the block size. Doesn't have a block size. Has a larger block size. And you see there's a big queue. The reason why transaction fees are so expensive on BTC, which is what most people call Bitcoin, is because they've got a block size limit. So you see the block's too small, so it can't fit all the transactions. Whereas the other fork of Bitcoin, which is Bitcoin Cash, because they don't have a block size limit, it can easily accommodate all the transactions. And that's why it's got much lower transaction fees. The transaction fees are $1 at the moment for Bitcoin BTC. They're 0.2p or 0.2 cents for Bitcoin Cash, and that's because of the block size limit.
Oh,
okay.
So to be clear, but Bitcoin Cash
well,
is an
kind
entirely
of. But
different
what happened
blockchain. Coin
was
is it?
You had the Bitcoin blockchain, and then it forked, as Dan Lee just said. So it forked into two, into Bitcoin Cash and Bitcoin or BTC. So actually, they're exactly the same. Well, at that point that they forked, they were identical. And the reason why they forked was because people within the developer groups and the etc. Wanted to have a block size limit, whereas the Bcash people don't think there should be a block size limit. And that was the main difference between BTC and Bcash. They're basically very similar. They're genetically very similar, but they've got some big differences now. With particularly the main one being that BTC has this block size limit that's impractical, whereas Bitcoin Cash has a much larger limit which can easily accommodate all transactions. So there's big dispute within the crypto community as to which is the real Bitcoin. And myself, I say I'm like an agnostic. Actually, I say in the end, whichever chain is the most used to society will have the most users, and then basically then be worth the most in the end. And so currently BTC is the case, but personally I prefer Bitcoin Cash because I think it's much more useful as money, and there's other things as well which I won't perhaps. Well, okay, there are other things. The main one being you can do a lot of the functionality of things like Ethereum. You can now do on Bitcoin Cash as well. So it's got all these potential uses as well. But as Dan says, whichever one is the real one, as PHS says and Dan says, whichever one is the real one, and I agree with you here entirely, they're complete speculations, because which I'll kind of come on to later. But myself, it wouldn't surprise me to see them going down in value lots from where they are now, because most of the value in the chain, in the financial value, is just pure speculation.
Agreed.
So anyway, where were we? I was just explaining that any two individuals can transact with Bitcoin in a peer-to-peer manner without using a trusted third party. And because the Bitcoin blockchain ledger is completely open, anyone can check its entire transaction history. Now, what I'd say, Keith, to kind of answer your question is, like, I myself doubted Bitcoin technically for a long time, but once you've done a certain amount of research, it is kind of convincing that it's reliable. You know, you can rely on the transaction history as being true, and it certainly proved that for the last 20 years. Okay, now Joe's perhaps refining I had a kind of slightly dirty explanation, which he's given a more refined version of. A simple way of thinking of it, Joe Ainley is saying, a simple way of thinking of it is if you have been sent one Bitcoin, your hash value is 1234 for that transaction. Other users in the network do the same calculation and get a value of 5678. Therefore, your transaction cannot have happened. The 51% attack is if you have more than half the network compute. So if 51% of the network will say the hash value was 1234. So you've got there's a competition every 10 minutes for all the miners to come up with the next block using hard maths that cost loads of money. So in order to in order to do a 51% attack, you'd need to generate the hash power of 51% of the network, which would be pretty much the UK electricity generation or something like this for those 10 minutes. So it's kind of financially impractical, but also there's other things as
Yeah.
well. If someone did a 51% attack, everyone would then be able to see it, and then they would be able to not use that chain and basically hard fork and use a chain a replay protection, kind of a chain that started before then, so it could kind of be put right anyway. But even to get to that point, but it's kind of hypothetical. Even to get to that point would be very unlikely, because and the other thing is, all the other miners, when you're mining, they can see the meme pool and the transactions. So if someone stuck in a fake transaction, the others could see it. Yeah, and Dan Leeds is saying, yeah, the problem is that you have to keep it on it. Yeah, so if you have to keep it on an exchange, got power demand there. Thanks, Keith. So 16.6 gigawatts. So that's more capacity than Total Energies has. Well, in fact, more capacity than all the oil. Well, the only company I know that runs power stations is Total Energies, and they've got double their capacity. So there might be some errors in my explanations, but I've given a broad kind of explanation of those things. And wow, so it's 3 times UK nuclear power generation.
Yeah. I know. Absolutely shocking numbers. I just don't know whether. Yeah. I know. Absolutely shocking numbers. I just don't know whether to believe those are true. I mean, they're just so big.
Yeah, PHS says that what is reliable or not is the technology behind BTC, but their use of money is entirely a psychological exercise on the part of society that uses ethereal tokens of money good, and thus worth exchanges real goods for services. Yeah, so really the Bitcoin project is successful in it's shown, it's been proved to work. It is a way better way of storing records than computer databases. But yeah.
Can I dispute that? I mean, it's, and the thing is, if you
But that's
make
the
a mistake,
point. There is
whatever
not a
reason, there
mistake.
is a
This is the
mistake
point.
in
There
like,
will you will
so
not have a
you're
mistake.
you something on the credit card. No, but the thing is, but let's say in a normal credit system, like you you do your Netflix subscription and they overcharge you for a month. You just get your money back, and they change the entry in the system. In the blockchain, you can never do that.
There's
So,
less mistakes
I mean, I just
in
the financial
there's no
system seems to
mistakes with
work
a
incredibly
Bitcoin
well, if you ask me.
blockchain. Not one
And
single mistake. Whereas obviously with the banking system using computers, there are occasional mistakes, but they're kind of fit for purpose. But so, for example, you Well, okay. So the
Okay.
thing is, you really the problem with one thing with Bitcoin is you need to spend a long time researching it before you can really feel comfortable in yourself. But the thing is, I think that the actual project, as I was saying, it's successful in that it's a better way of keeping a ledger than. And I'm going to surprise you in a moment when I start telling you what the UK government's doing with blockchains. But although it's a success in that it's proved its concept, it's a failure in that Bitcoin isn't being used for its initial purpose as a peer-to-peer electronic cash system, and the government's put in all kinds of barriers. So now, in order to use Bitcoin, or you need to go to a exchange, give them all your personal details. If you've accumulated some Bitcoin and you want to cash it in, you have to go through all the the bank won't accept your money because they'll say, well, where's this money come from? So because it's not really being used significantly, and there's this big
Yeah.
proof of value, store of value narrative going on. But frankly, my personal opinion is that Bitcoin's been pretty much has kind of failed for now. Technically proof of concept success, but in terms of adoption, it's failed. 99% of all the value of all these blockchains is purely speculative, and I don't expect them to go up all that much more. And i.e. 3x, 5x, no more than that. And there's a very good chance they could go down significantly, 90% from here, because I think they've kind of failed to break the tidal wall of government, and however, in the long run, it could challenge the banking system, but I don't think it will happen probably in our lifetimes, because you basically there's no way the government's going to allow Bitcoin to take over the financial system. So you're going to need like a massive war or something for it to happen. So I love it. I really love blockchains, and it's amazing technology. But currently, most of the value in my eyes is speculative. I don't think it will become used widely, possibly even in my lifetime. But I kind of feel like one day it will, but probably not in my lifetime.
The thing is, just thinking about the energy consumption. But the thing is, just thinking about the energy consumption of Bitcoin. Okay, so every day it is using 2.5 times the UK nuclear fleet.
It's
okay. Where is the money to pay for all that
in
electricity coming
America,
from? I just don't understand.
There's companies that are rigged up to solar panels. So all these solar panels they've built in Texas, but which no one ever needs the electricity when they're actually working. They're sitting up Bitcoin rigs to make money from that at a cheap price. Also, if you have, say, a energy source like, let's say a hydro plant, but it's somewhere miles away from anywhere, not useful. You could actually generate electricity there. But also, most of it is Russia and China. So a lot of the current hash rate is Russia and China, where locally the government are basically burning coal and oil to get an income from selling Bitcoin. But the thing is, because it has a certain value, you're not going to be able to stop people from mining it, because if you ban it in America and Europe, then people are going to just mine it in China and Russia using coal. And but currently there's a mixture of basically China. I mean, you can find out. Okay, I'll go and get the data. Let's get the data on that. So the okay, so I think it's Bitcoin hash power. So why is it not telling me? Okay, so Russia is 5%. That's mostly just coal and oil. I do wonder if because we're not buying their gas anymore, I'm expecting them to start mining Bitcoin in some of those rigs. China is 21%. That's mostly coal. The most is the United States with 38%.
Yeah.
That's fascinating, isn't it? And that's basically all. Most of that's publicly raised money. So they've stocks that have been IPO'd to mine Bitcoin. So they've used IPO people's money, and then they're mostly linked to renewables, but also there'll be gas powered as well. Germany is big. So, oh no, it's not 3%. Who else is big? Canada's kind of big. They've got lots of hydro. So I'm actually surprised. It's since I last looked, there's a trend towards it being mostly America. So that's interesting. So so that's so I opened a can of worms there when I started talking about Bitcoin, but I think I made a good effort trying to explain it, but everyone can well, everyone can research themselves, and also
the fundamental problem
later on,
is
I've
we're
got
all
a
too
bonus
old.
bit if we get there on Bitcoin. So anyway, so the fact is that with the Bitcoin invention, we've got the invention of using blockchain ledgers, and this is basically the next the next revolution really in money of account. Follow from the database ledger, we now have blockchain ledgers, and there's two things that I can say for sure. Now, one is CBDCs are going to happen. So the UK government have released papers, and they are basically going to, although they say they've not committed yet, they have, and they're doing the work now. So basically, they'll be building Bitcoin from next year and rolling it out by the end of the decade. And so Bitcoin is the digital pound, and this is going to be introduced in the UK, and it will initially replace physical cash. In fact, I've got a little diagram here. So here's the banking system, and the central bank's going to have a CBDC ledger, centralized, run by the central bank, and it's going to everyone will have their own little wallets, and they'll be able to pay each other with the Brit coin, and that's actually it's not going to be it's basically just going to be to replace cash, but they've said they're not going to replace it entirely, only partially. If anyone who's interested, go onto the Bank of England website, because on there, I'm just looking for it now. One moment, I'll just show you this. Whenever I've been looking at them as part of my research, and they look
I
a
don't
bit,
read many
they're
of them
almost a
actually,
bit
to be
patronising,
honest.
some of them. But anyway, so this is the official Bank of England document.
Well,
The digital pound,
yeah.
a new form of money for households and businesses, and make it a bit bigger. So it's actually signed by Andrew Bailey and Jeremy. Yeah, it's by Jeremy Hunt and Andrew Bailey. Have both signed this. So they've got. Yeah, so we're currently they're going to build it by 2025 according to this time plan. So they'll be doing pilot tests next year.
Wow.
So yep. So anyway, the blockchains are going to be used to create digital fiat currencies, and this is happening now. And so this is the future, I'm afraid. So even regardless of if Bitcoin failed, it was a success in that governments are using its technology. Well, no, you see, this is the thing with the blockchain. It's hard to make mistakes, and it's hard to, they're much safer than a computer system. They're a lot harder to hack. Yeah. So Magnet says that the power is completely pointless, and that's a kind of hypothetical argument, because some people say, I think if something's beautiful, it's worth using the energy. But that's why I've not got much friends on your climate change channel. The mistake is if you pay the wrong, and that's true. If I'm paying into your wallet from my wallet and I enter the wrong address, it's irreversible. That's true. So anyway, and then there's stable coins. So stable coins have emerged, which they're not using proof of work like Bitcoin. They're completely centralized, but they use blockchains to create a digital banking system, basically, or a digital remittance system. So you're allowed to use stable coins to transact. And what happened is they currently only exist on certain crypto exchanges. And so what happened is during the big Bitcoin and shitcoin price pumps of 2018, there were lots of people in China and Russia and various dodgy places who wanted to buy and sell crypto, but obviously they weren't allowed to using US dollars. So what happened was to fill that gap, Tether popped up, this company Tether, and created these stablecoin tokens that use blockchain. So people were able to use billions and billions of buy billions and billions of these stable coins so that they would have a kind of a token equivalent to the US dollar. And so Tether has allowed the creation of basically the printing of equivalent US dollars, which have been used. Now, actually, the government has discussed stable coins and is going to allow them if regulated. So you're going to have a situation where in the banking system, there's going to be people using stable coins in some kind of form or other. There's actually, there's a there's currently a bill going through Parliament discussing it now to regulate stable coins. And if you go on the Bank of England website, they've got a whole section on stable coins. So the fact is, the blockchain is coming to the financial system, and here I've got the money supply, and you can see that currently we know that notes and coins are going to be augmented by the CBDC, and stable coins are going to be coexisting with existing bank deposits and things. Now, the question is, are the banks going to use blockchains for their actual pipe work for the current banking system? So are they going to do all the remittance systems and storing your banking records and stuff? And personally, I think that could happen in the future, but that's more the as of now, it's only clear that it's stable coins and CBDCs. As far as I can tell, currently all the rest of the pipe work will be kept the same for now. So before I go on to really what's the final part, which is discussing the oh god, I've just realised it's 10 to 10. But before I go through the final part, anyone got anything to discuss on the stable coins and blockchain ledgers, and that being the next logical step for ledgers in money of account? So thanks. Okay.
No, carry on. Good chat, by the way. Good chat going on in the chat.
Okay. In terms of speed, I'll press on. So so money supply then is something that's important. We've got this trend of as we've had all these different types of medium of exchange ending up in fiat and debt ending up in database ledgers, when you look at the money supply, this has increased and increased as the economy's increased and increased, and these technologies have enabled that. And I looked into money supply, and there's two types. There's public money and private money. So public money is notes and coins issued by the government, bank reserves held at the central bank, and quantitative easing can be, in some cases, public money. And private money is simply digital bank deposits created by regulated commercial banks. And this only is created when people deposit their money or they create bank loans. And when you look at the UK money supply here
Mhm.
in this pie chart, you see that the vast majority of all the money in existence is simply private money,
Yeah.
digital bank deposits on a computer screen at a bank, created by lending people money. So that is just
Yeah.
quite a revelation for me. Um, and and you get different types of money supply: M0, M1, M2, M3. M3 isn't much more than M2, funnily enough, when I looked. Now, these are the US definitions, the UK of different, but I've got here the Bank of England. And you see the public money is essentially the banks hold reserves at the central bank that they've got to. Um, and those reserves are used when two different banks transact with each other. They actually use these reserves held at the Bank of England, but basically you just have M0, the coins issued by government, and that's about it, really, from the Bank of England, plus these reserves, of course, but they're not actually counted as part of the money supply. And then you have, okay, sorry, they are in England, but not in the US. Sorry. So according to the US definitions of money supply, the bank reserves aren't counted, but they are in the UK. And then the banks, the vast majority, as I've shown, of the money supply is digital bank deposits. And then the M2 is actually not much more added onto that. So however, there's a bit of a question mark when I drew this up, which is what happened in 2020. So you see, before COVID, it was actually mostly M1, and then most of the M2 switched to
Mhm.
M1 during COVID. And I took a look at that, and I don't know, can anyone help me understand this? M2, by the way, is basically time deposits and retail money market accounts. So it's not even big,
Time.
these are like individuals who've got lots of money. Yes, the US.
So is this the US? Can you take it back one chart, please? Okay, so what happened in the US is that unlike in the UK and Europe, where a lot of the pandemic stimulus came in the form of support for businesses, so like loans to businesses to support salaries. In the US, a lot of the pandemic support was in the form of direct fiscal transfers to consumers. And there's a whole load of these. Let me try and dig out exactly the details, but the what you're seeing there is the result of governments transferring the US government
Right. What,
transferring
to
directly
individuals' bank
to
accounts?
US bank
From
accounts.
the relief checks, the free COVID money and stuff.
Yes. Yeah. Yeah, there were. Okay, here we go. Okay, I've actually, because I'm doing something on this next week in the weekly, so I'll post this. You know, so in the US, you had the.
While you
Actually,
look
that's
for it,
not it.
while you
That's
look
not
for
it.
it, an
The
excellent comment here by
I'll
PHS.
find it. Hang on. It's the yeah.
Developed economies with sophisticated banking systems are inherently dependent on governments to function. Very few people and almost no companies are capable of existing without the services that the government provide. Just the basics like rule of law, backed by the coercive power of the government, are the very foundation of every effective transactional economy. You only have to look at what happened to Western Europe when the Roman Empire collapsed. Economic sophistication totally collapsed. From cash-based economy back to barter, collapse of cities and trade.
Yeah.
And this is, to be honest, I don't think Bitcoin will be allowed to exist as anything other than a kind of cult background hobby, unless you get a situation like this arises. Then it could, that would be a kind of situation where it would then arise. But as long as you have governments that require the current financial system to run, there's no way they will allow it to be legal to use Bitcoin in a meaningful way. And by Bitcoin, I mean real Bitcoin, not BTC. So, starting in, the Cronus Aid Relief and Economic Security Act, the CARES Act, provide economic impact payments of up to $1,000 per adult.
Yeah. Yeah. There were 3 different schemes in the US, each providing direct transfers. So in total, here we go. Because I was reading this, is the Bank of, let me read this out. This is from the Bank of France, who did they were talking about the US fiscal stimulus during the pandemic. The rest essentially came from government transfers, with households receiving around US dollars 1,133 billion in additional net transfers.
That's
Net
1
direct
trillion
checks, unemployment benefit, food stamps, and tax reductions in
in the
2020.
US.
So there's
And so
1.1
let's
trillion in
get my tally
direct
stick out.
transfers in the US.
Get my abacus out. Voila. So that is roughly it's a bit more than 1.1 trillion, the addition. So you've solved that puzzle. And is that,
Yeah.
where was that from that you just read out?
Glad to be a
Thanks
sec.
very much. So that was
Bank of
explains.
France. I'll post that.
And it's
now.
kind of shocking, really. But the question is, there's obviously been quite a change here from most of this being M2 to most of it being M1. So what does that mean for the financial system? What's going on there? Did that money go into Tesla and Nvidia?
No, a lot of it. Okay, so not all of it got spent. Actually, this is an interesting question because some of that money went to pay down debts, and actually that destroys money. So if you use, a bank deposit to pay off a loan, you actually reduce the money supply. But obviously, poor families spent all of
The
it.
problem is that's a big
And a
increase in
lot
the
got
money supply.
saved,
Just that.
as we've been talking about.
So anyway, so I've kind of I'm not going to go into this. This is for the next part. This is for part 2. But all I say, my main point is that over time, what I've learnt from this work is, well, the number one thing I've learnt. I've got some key findings here, but really the number one thing I've learned is that money doesn't really exist other than in confidence. It's only money is just created by banks who have got these commercial banks who've got this magic ability to print money just based on whether or not people will pay them back or not. How much money exists is purely a function of how much economic activity is going on, and therefore how much banks are prepared to lend people. Or, put more simply, how much money is just purely a function of how much money banks print out of nothing. It's just incredible. And also the fact that most of that, the vast majority of that is these bank balances, and the actual money swishing around, which is kind of what I always thought of as money, is only a minor percentage, and even then, or physical money, and even then, it's not backed by anything anyway. It's just worthless paper. So it's absolutely fascinating, and also how all these it's really useful to have gone back the historical progress, because then you really understand how, as technology improves, the banking systems be able to accommodate ever bigger economies using these new technical innovations, and we are definitely at the start of a new one with blockchain technology, because banks are already using blockchain. They're already developing blockchain technologies. However, not banks, more the government for their CBDC. But there are some banks doing. Citigroup, Morgan Stanley, and HSBC have all created tokenized blockchain products, but they're kind of niche things. But frankly, I think that the banking system will be adopting blockchain technology, but I'm afraid it won't be Bitcoin. It will be. I'm afraid that they're just stealing the idea, and they're going to use the blockchain bit, but it won't be proof of work. It will be centralized with the Bank of England at the helm, I'm afraid. Also, one other thing I'll mention is I think that this money supply is an exponential graph, and although we had this unusual uptick and then down, I think it's reverting back to the trend. And my bets, how my portfolio is kind of set up, is that we're going to have a lots more money supply in kind of inflation versus gold, and inflation, um, yeah, inflation versus gold. But I think there is going to be more money supply in this exponential trend, because to me, it's just like a inevitable thing. And I think I feel like the current political system is trapped in this exponential trajectory, because the government has to keep it going with money printing and in inflation, because the moment they stop it, well, because any government that puts a stop to this and switched us over to a more kind of Austrian economics, would that government would be voted out. So I think we're in a perpetual trap, and I think that this money supply is going to continue in this trajectory, and that's what all my bets are going to be based off. I'm looking, if I see it keep to go up as it should do with this trend, then I'm happy. But if I see it dropping down from here, then I'll reevaluate that. But otherwise, that's one of my main theses going forward for my investments. They're going to be based around money supply. So the S&P 500, for example, you know, I think that its trend can be explained in some part by that. You know, it looks incredible, this 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 trend here, but I don't know, when you consider money supply, it's more believable to me. So okay, so that's kind of what I pulled out from that. It was to be honest, it's been great what I've learned from doing this, so well worth it. So I think now I can open the floor for more general discussion if anyone's not tapped out. If everyone's not tapped out, I should open the floor.
Well, thanks. Really interesting chat, actually, all about various aspects of money, including the future of money and Bitcoin. So thanks for putting all that together, Rogue. I mean, it's actually been a really interesting and informative evening, and really interesting chat, all about gold, the cost of all these different forms of money. So thanks for putting all that together and provoking a really interesting discussion.
Have you the date for the next? I think did we agree a date already for the next one?
At some stage, are you?
I don't want to open my diary out in case I dox myself. To check. Was there one in June? Right.
Yeah, we have. It's 5th of June.
So
Wednesday, the
I'm
5th
going to
of
go
June. So actually not too
for then
3 weeks
the
time.
banking part, and then maybe if that's a bit smaller, we could do Bitcoin as well. We could have a Bitcoin open season at the end of it. Well, you're never too old. In fact,
the thing
I
could
could
learn tonight is
how
we're all a bit
about
too old
next
for
show?
Bitcoin.
Okay, how about next show we do a Bitcoin Cash transaction live?
Okay.
If you're interested, we could do that maybe to make it interesting.
Okay.
Well, exactly. This proves, I'll reveal the Bitcoin address, and no one will be able to hack it. That address, and then you can actually then go on the blockchain and see that transaction. In fact, you can actually, if I don't know if I've still got it up, you can have. No, I don't. On that TX thing I had, I've not got it there. You can actually watch your transaction. You could actually make a transaction and watch it jump on the bus on that website. So anyway, so this is yeah, really enjoyed that, and thanks everyone for your comments, and really look forward to the next one then.
Yeah, no, I really enjoyed it. I think it's possibly the best one we've done. Yeah, no, I really enjoyed it. I think it's possibly the best one you've done. Actually, we had a really good chat in the
most
chat
welcome,
box, and I think we all learned
have
something.
a good have a good
thanks
week,
for
everyone.
all your hard
Goodbye.
work, Rogue.
I do videos like this one just for fun as a hobby. It's for entertainment purposes only. Always consult a qualified financial advisor before making any investment decision.